Marcus, turning the spotlight to the European banking sector.
Yes, European finance ministers, they failed to reach a deal on how to wind down failing banks. They got together in Brussels earlier to try to get on the same page. They're working against the clock to build a European banking union. It's touted as the cornerstone of Europe's efforts to prevent another Eurozone debt crisis from happening. But, as usual, the devil is in the details, as Jonathan Crane now explains.
The clock's ticking for the EU's flagship fiscal reform package as finance ministers thrash out the finer details of a banking union.
It's about breaking the vicious circle between banking debt and sovereign debt. It's about avoiding the economic crisis happening again. It's finally a question of unifying the interest rates in the Eurozone.
The banking union's set to be built on two pillars, supervision and resolution. The supervision part's already been agreed, with the European Central Bank due to oversee the Eurozone's biggest 130 banks from November. But the second pillar, the single resolution mechanism, is proving hard to cement. Designed to deal with failing European banks before they can damage the wider economy, several aspects of the mechanism are up for debate. First, who decides whether to wind up a bank? EU ministers don't want to give total control to Brussels, which has warned of politics slowing down the process if individual states get a say. Second, if the decision's made to rescue a bank, who takes the initial hit? Should it be the EU states that share the burden, or should it be the bank's creditors? Germany's adamant it's the latter.
It makes no sense to constantly talk about the taxpayer no longer having to foot the bill, and then not to apply the rules about owners and creditors taking the risk at the start.
The logistics of an accompanying clean-up fund paid for by the banking industry must also be decided. Failure to conclude a deal before the European Parliament breaks for elections in April would mean months of further delay and uncertainty.
Sticking to the banking sector, the European Central Bank has unveiled more details on how its stress test of European lenders will actually work. The ECB is to probe bank assets to the tune of 3.7 trillion euros later this year. The aim is to check the health of 128 Eurozone banks and to make sure that there are no lurking risks for the wider economy. The result of the much-anticipated stress test will come out in October. There appear to be things to be stressed about in the European banking sector. Italy's largest lender posted a record €15 billion loss for the fourth quarter last year. The red ink comes as UniCredit set aside billions of euros to cover bad loans. That's loans that are unlikely to be repaid. Investors saw the record loss as a sign that the bank is cleaning up its books, though, and shares in UniCredit gained on the news. Let's take a look at the stock markets then on the back of that. In the United States, we're seeing stocks trading to the downside this hour. There's not a great deal of economic data to be looking at this session, but there are concerns over geopolitical tensions over Ukraine, and that seems to be weighing on shares. Let's show you the US markets. This is how the US markets are trading this hour. You also saw the European markets there earlier, and the main indices closed mixed. The DAX in Frankfurt got a boost by strong trade data from January. Shares in UniCredit helped to drag Italy's main stock market index into positive territory. The CAC 40 here in Paris was weighed down by the situation in Ukraine. As you can see there are the figures once again. And speaking of the Ukraine crisis, the European Union is offering Ukraine trade breaks worth some 500 million euros every year. The measures were presented by the European Commission earlier. They include the temporary dropping of customs duties on Ukrainian exports to the EU. The aim is to make it easier for Ukrainian companies to sell their goods in Europe, as seen as an attempt by EU countries to support Ukraine's new leaders.
Our first priority is a negotiated and peaceful outcome to the current crisis. We are also committed and ready to support Ukraine to stabilize its economic and financial situation. Last Thursday, European Union heads of state and government welcomed the €11 billion package of support to Ukraine presented by the European Commission.
A couple of more corporate stories to tell you about. A French court has put Qatari plans to buy the department store Printemps on ice. Investors from Qatar want to take over the French chain through an investment firm based in Luxembourg. The court ruled, though, that employees had not been consulted sufficiently, and the French competition watchdog gave its go-ahead last year. The deal was closed financially in July last year, but the court has now thrown a spanner in the works. And Chinese internet firms Alibaba and Tencent have been picked to invest in China's first privately held banks. China's going ahead with a plan to make the economy more productive by loosening the state's grip, and an overhaul of the Chinese financial sector is seen as a cornerstone of those efforts. There you go, you're up to date with the latest business news, and I'm going to hand it back to Laura.
Thank you, Marcus. And Marcus will be back in 1 hour with another update on all the day's top business and financial news. But for now, let's bring you some sports news. Dan Levy is here with us in the studio. Hello there, Dan.
Hi.
We're going to start with